Inflation soars to a 40-year high. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because US inflation is at a 40-year high, everyone, 7.9%. Let's jump back, well no, actually we'll jump over here to trading economics before we look at this article. You can see here, this is at max data. There you go. We're heading up towards the 70s and early 80s inflation boom. Look at that. It shot up there. This is memorable, guys. Look at this. Look at this. I mean, what do we compare it to? Here, 2008, and boom, down. Oh, boy. We're going, look at the 40s. Even the further back you get, the 50s. This is quite unique. There's a reason why when I talk about construction contracts and contractors falling over because costs of goods are going up, why I was taught at university you'd have clauses in contracts for material changes, for rising costs. These would be usually for bigger projects, like your steel doubles or triples. For a government job, there needs to be a way for the builder to ensure that they're still going to get paid enough. And for larger contracts, that makes sense. But, well, we really haven't had to worry about it for some time, honestly. Inflation hasn't been that big an issue. But there you go. Look at it skyrocketing. Let's have a look at some of the traditional inflation heads. Gold hit hedges. Gold hit a new high, and it's back down to 1992. Silver, the poor man's gold, it's climbing right up there. We'll jump out to all data. Still not at the magnificent $50 price. Some people are claiming gold will hit to $100,000. I mean, sure, let's see what happens with nickel, everyone, how that goes. Where's nickel? Where's nickel? There you go, still at 48 to 41. I think the market's still closed for another day, or no, a few more days. We'll have to see how that goes. And let's check out the modern inflation hedge, or some claim it to be. Bitcoin is at 38,000. Now it jumped up. It jumped up on news coming out of Biden, with regard to some executive orders and new things surrounding crypto. Yeah, that was a case of buy the rumor, sell the news. That was exactly buy the rumor, sell the news. So we'll have to see how it keeps going. So let's jump back here and have a look at this article for the Fin Review. So, rent of a primary residency jumped 0.6%, the highest since 1987. Pushing the annual rise to 4.2%, the highest in 15 years. Gas prices spiked 6.6% in the month, and we're now 38% higher over the year. 38% increase in your petrol. Because this is, think about it, that's going to flow through to everything that's put on a truck and transported around. So that's how the cost of living is. Everyone is going to feel it. And people are putting, Biden did this, stickers on the petrol bowsers, taking photographs of themselves and putting it on social media. What was it? That movie with Will Smith, I Am Man. Someone showed a clip of the video there where the gas prices are now higher than they'd imagined in the apocalypse in that movie. What does that tell you? Grocery costs jumped 1.4%, the sharpest one-month increase since 1990, other than during a pandemic-induced price surge 2 years ago. Over the year, groceries are now 8.6% higher. Fresh fruit and vegetables rose 2.6%, the largest monthly increase since 2010, and are now up 7.7% over the year. Men's clothing rose 1%, bringing the annual rise to 8.6%, while women's clothing rose 1.5% in the month, pushing the annual rise up 6%. The price of toys and playground equipment, all of it would be imported, I'd imagine, had their largest ever monthly increase since records were kept of 2.4%. In a month, everyone. We're not talking a year, a month. 2.4% in a month. The annual cost goes up to 6.7%. So if you're not getting, if you didn't get an 8% pay rise in the US, you're losing money. You're losing money. That's just different times. The numbers are eye-watering, and there's more to come, said Eric Winograd, senior economist at asset management firm Alliance Bernstein. The peak in inflation will be much higher than previously thought and will arrive later than previously expected. So this isn't all transitory. It appears not. And here we go. Biden points to Putin. So Biden is blaming it all on Putin. And some of them will believe it. I guarantee you some people will. Well, the Democrats will use that to justify their terrible decision in voting in Biden. It's got nothing to do with the fact that Biden disincentivized any investment in oil infrastructure in the US. Like Canada could even be supplying oil to it, but they shut down pipelines. Nothing to do with that. It's just Russia's invasion of Ukraine, which will hopefully be over in a month or two. I mean, let's check over here. Hang on. What do I want? Commodities. What's oil sitting at right now? Crude oil, 105, 107. Still above $100. Still above $100. Today's inflation report is a reminder that America's budgets are being stretched by price increases and families are starting to feel the impacts of Putin's price hike, Mr. Biden said. I mean, it's all a game. It's all a political game. You've got to find someone to blame. So they're using Putin. A large contributor to inflation this month was an increase in gas and energy prices as markets reacted to Putin's aggressive actions. As I've said from the start, there will be costs at home as we impose crippling sanctions in response to Putin's unprovoked wars. As I just get the image of someone struggling to drive to their shitty job because they have to drive so far to get there, and some left loony going, "Oh, it's a small price to pay to fight Putin. You're unpatriotic." This is how some of these people think when you're struggling to feed your family or work. But even before the war, price increases, strong consumer spending, wage rises, and supply shortages had sent U.S. inflation to the highest level in 4 decades. Yeah, the war is not what's driving this. It's exacerbating what's already happening. Okay? Excluding the volatile food and energy categories, so-called core prices rose a sharp 0.5% month to month and 6.4% from a year earlier. Economists tend to monitor core prices because they more closely reflect longer-running inflation trends. Seeking to stem the inflation surge, the Federal Reserve is set to raise interest rates several times this year, beginning with a quarter-point hike next week. The Fed faces a delicate challenge, though. If it tightens credit too aggressively this year, it risks undercutting the economy and possibly triggering a recession. Well, let's have a talk about this one. Yesterday, we looked at a video about mortgage or the impact of predicted interest rate hikes here in Australia. And the end of it, an average mortgage is looking for an extra $800 a month, everyone. Another $800 a month. That's $200 a week. That's decent coin in anyone's language when you're trying to pay off a mortgage or buy a home or even invest for your future. Now, here we have the US talking about more and more rate hikes. What do you think Australia will do? How do you think we'll be impacted? And how is the average Joe Blow in America going to respond to all of this? How are they going to deal with it? It's going to be interesting at the next election in the US. It really is. How many people will buy this bullshit that it's all Putin's fault? Because that's the narrative they're using now. I wonder if there was a benefit or an incentive to encourage this aggression for political purposes. No, not at all. I'm just being crazy there. What do you reckon, everyone? Let me know your thoughts in the comments below. How are you handling inflation? As always, thanks for watching. Like, share, subscribe to the channel. If you're a fan of the channel and want to support us, there are a few ways you can. You can join us on YouTube or Patreon, sign up for SelfWealth or Stake, or use our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, everyone. Have a great day. And watch out for the next, it's insane inflation. It's crazy world, eh? Crazy world. It's good coffee. That still hasn't, still cheap.